With Tesla's RoboTaxis set to launch by the end of 2025, many are wondering, is this the beginning of the end for Uber? In today's video, we'll break down the key differences between Tesla and Uber, analyze their future prospects, and most importantly, reveal what our artificial intelligence algorithm predicts for the long-term outlook. As of now, Tesla is trading at $342 and Uber is at $78. Our AI is forecasting both of these stocks, and it's very interesting. But before we show you guys that our AI predictions, let's take a look at the financials. For Q4, Tesla had a net margin of 9%, while Uber had a net margin of 57%. That is a big difference. In retrospect, it makes sense given one has gigafactories to build motor vehicles, and the other provides a software and salary to those driving their own cars. However, the big question is, when the robotaxis come out, will they harm Uber's market share? Most likely, but no one knows for sure by how much. Additionally, all the news outlets are talking about this battle, and it seems to be a hot topic. Taking a look at their revenues, it's interesting to see how Uber manages many sources of revenue, but Tesla only has two main sources of revenue. Because Tesla doesn't have many, they will be able to create a whole new platform for a whole new source of revenue that will compete with Uber's. Tesla is a bit overvalued with its PE ratio being 177, and the magnificent 7 PE ratio average is only 38 times earnings. Uber's, on the other hand, is very low, with it only being at 16, while peers like Lyft is negative. So Uber's is small, which shows it's not overvalued, and it's profitable unlike competitors. This strikes the question, will Tesla be able to be profitable on their robotaxi? Let us know in the comments if you think why or why not Tesla robotaxi will be profitable. Looking at Tesla's technical analysis, we see how it came down off its highs and is trading in a falling wedge pattern. This is a pattern where it typically leads to a breakout to the upside. Looking at Uber's technical analysis, we see that it bounced off support and is going to new highs. In the fourth quarter, Tesla announced they had achieved 3 billion miles driven in FSD as of January. This is big news for the Tesla robotaxi since it will be driven and rely on FSD. Tesla's FSD is getting really good, which is concerning for Uber. However, Uber announced some good news of its own, saying they had on average 33 million rides every single day. This is phenomenal. However, this doesn't mean everyone loves Uber. There are people who would prefer rides that are contactless with humans. This shows how big the market is and gives Tesla opportunity to come in and take some market share away from Uber. Here are Tesla and Uber's income statement charts. You can pause the video to look at them. Now we will be giving you guys our artificial intelligence algorithmic forecasts on Tesla and Uber. Here on the left, you can see a 3-month forecast for both Tesla and Uber. We can see that Uber has a higher predictability. This means that the AI is more confident in Uber going up. Uber also has a higher signal, which means that the AI is predicting the magnitude of the change for Uber will be higher than Tesla. Tesla does have a good positive forecast, but the AI is more confident in Uber going up, and that is why Uber has a higher predictability. The same thing goes for the 1-year forecast. Tesla has a good positive forecast with a high signal, however the AI is more confident in Uber's prediction. On February 9, 2024, our AI forecasted Tesla to be a top stock for S&P 100 stocks. In this 1-year time frame, Tesla had returns of 85%. This was way better than the S&P 500, which did 21% in this 1 year. And on February 7, 2025, our AI forecasted Uber right after earnings, and it went up 12% in just 3 days. Again, this AI algorithmic forecast was way better than the S&P 500, which was negative in this 3-day time frame. Thanks for watching. Make sure to like and subscribe. Let us know which stock you're taking, Tesla or Uber. And here's to smarter, AI-driven investing. See you next time.